Hey guys, ladies and gentlemen, boys and girls, we are going to look at the gold chart. This year I've marked how gold has behaved previously. Here's a swing high, here's a swing low, and there's another swing high made here, followed by the swing low here. And when you flip the whole move, it's going to give you the retracement levels. As you can see, it's 61.8 here, which had coincided with the previous break of structure high that has been broken. And here I have marked the New York liquidity zone, which is previously, you cannot see it here. So gold kept rising all the way up and made a swing low, and then started going sideways a bit, generating liquidity on the top and generating liquidity at the bottom. So in a lower time frame, a lot of people might have gotten gold buying down here, selling up there, and getting wiped out. And now as gold retraced back to the 61.8 level, which I'd already marked here as one its major support zone, plus New York liquidity right here, and probably right here, yeah, there. And also the 61.8 fib retracement. And once gold approached this zone, bounced back a little, went sideways again, and this was a news day, so it wicked down, collected, swept all the liquidity of the New York zones, and they pushed up, and there's been no stopping since. Now, if we are going to enter, I'm gonna use the fib again, which I usually do. Now we're gonna fib from the lowest point to the highest point here. As you can see, it retraced back to 38.2. A lot of people wait for the retracement to 50 or 61.8. But if the gold is in a highly bullish trendy market, and if the price has moved high significantly in a short period of time, it does not usually trace back all the way to 61.8 or 50. So if the move is much larger, let's say from 2600 to 2700 or something, it might only retrace up to 23%. That's usually the case. So, I mean, in this case, it has retraced back to 38.2. There should be some liquidity area here. Yeah, it's a London low, and here's an Asia low, and here's a New York low. So, and there's another New York low. So it managed to sweep two New Yorks, one Asia, and one London liquidity out, and then started pushing back up again, and then it reached minus 27 extension as well as the previous all-time high, and gold has shown no sign of retracement ever since. It kept going high and high and high. Now I have marked swing highs and lows that has been making throughout this time, and now as you can see, it has made a clear yet another swing high. Now when you look at here, it's pretty clear that this bullish run, consecutive bullish run, started from this bottom right here. So if you're gonna deploy a Fibonacci extension, I would use that low. Now when you do that, you can see that it has retraced back to 38.2 level, and also 61.8 level coincides with the previous all-time high that's been broken before. This seems pretty good to me. So what I'm going to do is, okay, let's go back to 1 hour again. Now, to my way, we're still going up, clear as day. And the way we're going to figure out if this trend is going to continue is going to 1 hour. and go into line chart and mark out previous lowest highest support broken in 1H. Okay, so now we're going to mark it out like this, and then we're going to go to 4 hour, and then we're going to mark out that 4 hour support is broken. Okay, now when we look at 4 hour, we can also see that there's a left shoulder here that could also act as a resistance. This 4 hour last support could also act as a resistance, and this 1 hour last support could also act as a resistance. Now what are we going to look at? Okay, here's a 4 hour, here's 1 hour and 4 hour support as well. As you can see, this 4 hour candle has closed below that. That means there is a high possibility, unless otherwise pushed by a fundamental or a strong rally of US dollar, there's a good chance, a high probability that the gold price could fall down considerably, either up to 61.8 or 79. When we, if that's the case, we're gonna have to figure out a way, a place. This place is to enter into a sell. So now how are we going to do that? Now we discussed that this is the left shoulder, right? That means we can expect some liquidity to be available in this area. So let's going to go down to 15 minutes and try to figure out where the shoulder is going to appear, right? So I'm going to mark it out like this. It does not necessarily have to be that big, but anyway, just to start off, we'll do that. Here, that's your left shoulder. If gold price start retracing, probably go up a little bit, go around like this, go back up, and then this, go back here, right? And this is the area might start to look to sell again. Now, so this in that way could be the right shoulder that we are looking to sell from. Now, on the other hand, this right here is the 4 hour last support that we have marked that the price had broken. In that case, that also would act as a resistance. Now, let's mark that out as well. There you go. I'm just gonna, this is too big, so I'm gonna make it smaller. There's no need to have such a wide zone. Nobody's going to be able to enter it in that zone if it's too big. So now you can see that left shoulder as well as the last 4 hour support has been broken. Coincides. It really coincides with each other. So now that by itself makes this zone a very strong one. And to sweeten the deal, if you deploy your FIB all the way from the top to the bottom, you can see that your 61.8 also landing right on top of all those two. Now, can it be any better than this? Now, something to remember is that we do not have any zone liquidity in this area, right? As you can see, this is at 5:15 to buy time, which means 1 hour 50 minutes later the New York open, and 15 minutes before NYSE open. So I don't see as this either of this or this as the New York high liquidity availability. So for that we're gonna have to go into this area. Now you see this here is the 4 o'clock. So now we can expect the price to come up here and get over these early sellers liquidity and then try and wipe them out before coming back down, right? So it could be either that or this, so you never know. So you have to be careful, you have to watch out for proper confirmations before you make an entry. That's one way to do that. So ideally watch out for confirmations in the lower time frame, such as 5 minutes. We'll talk about that later. Probably on another day in a different video. Now, ideal entry, and there's a good chance that price come up here, the London session, make this new high, and probably get some early sellers, go back down a little bit, and push back up in the New York session, probably at the time of a news release, and go up here, get all this liquidity. We can see very well there's some good liquidity on this area as well. Now get all that, wake up there, and quickly come down. That's another possibility. So I'd say be prepared for both occasions, both possibilities. And that's for sells. Let's say price will go up some after here. As you can see, there's the resistance here. You can see it goes up here, yeah, and then this way. Let's say something like this, right? And the retracement back to 61.8. Probably even go down slightly more. Wick it down, come back up. Wick down a bit more. And then push up here. Right? So all you have to do is wait until this price make a high, start retracing, and deploy a fib from the lowest point to the highest point, and wait till it retrace back to 61.8, even 50, depends. Just keep an eye on this area and this. This one. And this. So these are your buys, and here are your sells. From the high to the low, 61.8. That's the sell zone, and here 79 to 88 as the high sell zone. Remember these 4 zones. In any case, you must wait for confirmations. Alright guys, that's it for today, and I'll catch you on the next video tomorrow. Have a good one.